So
let's talk markets. Are we overvalued? Are we due for something in the form of a correction, or have we had it?
Well, I think we had a little mini correction, and then now all of a sudden we've got these 8 days in a row, and I think really we went through earnings season. We're almost done, almost 80% done, and earnings were stronger than people expected. I mean, the earnings were there to support the stock market being where it is. Is it still cheap? No, it's 20, 21 times earnings, depending on how you want to look at it, and it's still being carried by some of the big stocks. I think the big thing going forward is, I mean, you're going to have data coming through Wednesday with CPI, and where is inflation as part of kind of the mandate for the Fed? Because the Fed has basically said we're not going to cut rates until we see inflation come down, and if inflation doesn't come down, I don't think you're going to get those rate cuts till maybe till the end of the year.
And the last little lift there in rising stock prices came after the inflation number was hotter than expected, suggesting that the Fed would.
It did, but it also had Powell saying, I don't believe that we are in a stagflation area. That is that risk of the market, right? If we do get higher inflation and lower growth, what happens to valuations? And I think that could be really hard for the market to take at that point. So that's what's being digested, and I think the market's again forecasting, hey, maybe inflation does subside, maybe rents come down, maybe costs of mortgages, insurance, wages start actually slowing down. That's being built in right now. If that disappoints, you could see the market going the other way. And the 10-year, right? I mean, the 10 years, everybody's so focused on it, and then the other wild card is the debt. Like, where are we going with the debt? I mean, there's so much debt servicing to do with interest.
I forget
costs.
what the number was we heard last week. Rick Santelli had it. Was the gross number that we're going to be spending per month on debt service alone takes you up above $1 trillion a year.
Yeah, and when it was 2%, 2.5%, it was a very different ballgame. So how does that work? And then also the rest of the world. Where do we go with that? If the dollar is going to be that strong, you're going to have unintended consequences, especially in the trade market.
yeah, the problem is it's a bit of a trap, because if things hold in there and the Fed doesn't cut, that's going to raise those interest costs further, grow the deficit further, probably lead to more inflation, and then they're going to have to figure out what to do about that. But in the face of all of that, the market is still more or less going strong. And I don't know if you caught Ari Wald's comments at the end of the show just now. Just based on technical factors, he likes the strength he's seeing in housing still, capital markets, the market overall. I mean, there's so many things that have surprised people about this market to the upside. It wouldn't be that surprising at this point if it keeps going.
Right. And so if you do get that, but if you get the benefit of maybe the slowing down, the second derivative of cost coming down, the market can definitely still do that. It's that question that if you don't see that cost coming down and you still see a strong labor market and you still see pricing going up, I think rates don't come down, and then you've got that countervailing factor. Do the bond vigilantes actually come back and say, hey, we got to move the 10-year even higher? And if the 10-year goes even higher, then your discount rates and everything start really changing.
The Mag 7 has kind of become the Fab 4, I guess, maybe, Tesla. But what happens if one of those Fab 4 loses its footing? Can the market continue to make headway under those circumstances?
I think you can. I mean, you already shortened it down to the Fab 4, right? So what happens there depends on kind of those stocks. But I think people have started to really start diversification away from them. But they're still carrying a huge part of the market. I mean, you look at Google, you look at Apple, and they're still very strong. I mean, Apple's kind of rebounded from where it is. I do think that equal weighted index or other opportunities, as we've talked about in the past, they are other opportunities. You don't need the market might not go higher without the Fab 4, but you can definitely have stocks that will go up higher, as we've seen this year, depending on the sectors you want to be in.
Yeah. All right, well, let's bring in our friend to talk markets and all things related, the one and only billionaire investor, Leon Cooperman, chairman and CEO of the Omega Family Office. Leon joins us on the phone today. We're having a little technical difficulty. Mr. Cooperman, it's always good to have you with us. We appreciate your being here.
My pleasure. Sorry for the problems.
Oh, please.
I'm the last guy to fix them. I think we got video now.
I am, too. I'd be on the phone to whoever the provider is right now. Get over here to my house. I notice in my note that you say very unequivocally, we are heading for a financial crisis. I don't mean to question that at all, but I'd love to hear you.
You can.
No, I don't, because I'm more worried about it than not. What would precipitate a crisis?
A collapse in the dollar. look, we have two candidates running for president. One is bad, the other one is worse. What you is of each one is a function of your beliefs and your values, and both of them are really running for election. They're pulling at every stop. They're spending every nickel we have. The recent proposal by President Trump expects to increase the deficit to $2 trillion next year. We have a fully employed economy. The budget is supposed to be in balance. We're racking up debt like it's going out of style, and one of these days it's going to change, and we don't know the day. It's going to change when it's least expected. And so, in the 60s, there was guns and butter and crowding out. And I think that we're going to have we have guns and butter. We're going to have crowding out as a consequence of the policies we have.